All right, it is Monday, February 24th, 2025, and we're going to have to do this one real quick because I've had so many issues with OBS and the recording. I've done this about 3 times, but let's go. So this is the Nasdaq. We're looking at Nasdaq and the S&P. We're looking at the potential weekly draw for this week. It's currently Monday with no news. The first thing I want to say is for a while now, price has been range bound. If you look at this entire range here, it's just been up, down, up, down, up, down. So it's hard to decipher if any order blocks like this change state delivery here, it's hard to use these as clear signs of bullish order flow to then go to the buy side, just because we're so range bound. On the weekly, it hasn't yet disrespected any discount arrays, as in like a bullish order block or a bullish fair value gap or anything. It hasn't yet disrespected anything like that to show us that it is definitely going lower. You get more bearish price action as you go into the daily, but what I'll point out on the weekly, we've got this, which is the all-time high. It formed on the 16th of December. If we look at the S&P 500, its all-time high, which also formed the 16th of December, it isn't its all-time high. So there was a sweep of that high here and then a sweep of that high here, and what that creates is SMT, right? So there's an SMT divergence on the weekly over a span of months on the Nasdaq and the S&P, and that's at the all-time high. That is quite a bearish sign. But again, just looking at the weekly, there isn't really like a clear draw at the sell side yet to guarantee that price needs to go lower. When last week closed, it closed with a flat bottom on the down close candlestick, which we refer to as a devil's mark. A devil's mark is basically just when you get a candlestick comes down like this, and then there's no like wick low. There's like a wick high, but like here there's no wick low. Whenever basically you get like a flat bottom or a flat top to a candlestick, like this one here, the devil's mark, flat top to a candlestick, they tend to just be areas that need to be ran through. They tend to be a draw on liquidity. What we're doing with Monday is we're waiting and we're seeing like how does price respond once it sweeps this devil's mark? Does it want to come back up? Or does it want to just blast through it, right? So we need to go down to the daily to actually see any more of this stuff to have a better draw. So it's the same stuff here. We bring up the S&P. It's the same stuff. We've got that SMT divergence in here. As price came up here, it creates this buy side imbalance, sell side inefficiency. You include the volume imbalance here, so this whole bit is buy side imbalance. But then also down here is sell side imbalance, right? So what that does is you go up and then you go down. So this whole thing here actually becomes a balanced price range. So last week, what actually happened is price came up, it took out these equal highs here and then delivered out of this balanced price range. So it comes up, takes out the highs, sweeps liquidity, delivers out of the balanced price range and forms the SMT. As price did that, there's this up close candle here which was inverted, right? So it closed below, creates a bearish inversion fair value gap. Generally for me, like price action is pretty bearish, and I'm struggling with the fact that there isn't much of a clear draw on the sell side because there aren't like any equal lows. There's like you can say that this is like a low resistance liquidity, like a trend line type thing for it to run through, but it's pretty steep. However, if we do go down to the S&P, we've got this buy side imbalance here, which is a lot clearer than anything on the Nasdaq. This low is the target because the S&P also has its inversion set up there as well. Generally, I'm looking for lower prices, but since it's Monday with no news, I'm not forcing that directional move to happen just yet. What could happen on Monday is it either sweeps the devil's mark and forms bullish price action, or basically, as you can see here, this is Monday's candle, so from this low to this high here, if price stays where it is and doesn't trade up any higher, then you'll be creating this daily sell side imbalance. And then what I would like to see is on Tuesday for price to come into this and then come lower, or just not come into it at all and then go lower, right? So basically, we're just watching to see is price going to form this SIBI? Is it going to leave this devil's mark intact? Is it going to take it? How's it going to react to how it takes it? And on the 4 hour, we actually do have a sell side imbalance that formed on the 4 hour from here down to here. Seeing as it's so large, what we do is we bring up the Fibonacci and we measure it in quarters. Basically, if price is bearish, it wants to stay in this lower quadrant and it can mohawk into this quadrant here, but it should leave all of this untouched. With this price action coming down here and then coming back up and then coming down, this is actually the portion of the gap that needs to be rebalanced. I don't want to see price trade into this area whatsoever. If it does, then I'm going to be sitting on my hands. But if we go down to the 1 hour, you could imagine maybe that at 9:30 there could be a Judas swing of this high here. This is all like in line with bearish price action, right? So at the moment we're accumulating A, and then 9:30 manipulate M, and then 10 o'clock distribute AMD, right? So you get your accumulation, manipulation, distribution in line with the draw from the higher time frame all the way down to the lower time frame. Just accumulation right now. If you've got a setup where it's like it manipulates above this and then creates a real nice like inversion setup, if it's clear enough, you could take a real nice short. So that's my outlook for the day, for the week. Like I said, I'm not expecting much for Monday, but generally that's how I read price action from higher time frame, weekly, all the way down to lower time frame. And like this is 15-minute, and then you get your idea for the 15-minute, you get your idea for the 5. And like, we're not even framing a trade right now, we're waiting for market open, but then that's how you go down through the time frames and start analyzing, like waiting for your trade, like, waiting to pounce. But that's that. And I'll continue to give updates on different actions throughout the week.